Good afternoon, everybody. My name is Derrick Oldensmith, and I am an associated member of T3 Trading Group, which is a SEC registered broker dealer and member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. From between yesterday and today, I'm out of RGTI short. I'm out of OKLO short. I'm out of BMNR long. I actually got out of that late after hours yesterday. New position in TQQQ long. All right. So I gotta say, I am really surprised by today's price action, and that's as someone who has really been kind of a staunch bear for months now. I'm really surprised by today's price action given what happened yesterday with NVIDIA, where we were set to open up today. I am borderline shocked to be looking at a SPY that's down 1.5% on the day, Qs that are down 2.5% on the day. The IWM is down almost 2% on the day. TLT is up a little bit. What did gold do? Gold traded flat. Gold really continues to outperform crypto. The quote-unquote digital gold is down 3%. Ethereum's down 3.3%. Solana finished up. Oh, that's interesting. Solana was actually up a little bit. Yeah, where did we close SPX wise? 6540. So 6500 was a hugely important level previously, and we know that our medium term CTA trigger threshold is sitting in the 6400s. I forget the exact price, 6444, something like that. So that would be a really big level if we were to trigger that. 6419, thank you. Be a really big level if we were able to get through 6500 and trigger the medium term CTAs. But let's turn it over to the price action here. Again, I'm just really surprised at the degree to which we sold off. We had a large gap up this morning, which made a lot of sense. So, to recap, to state the obvious that everybody knows, the most important company in the world reported earnings after hours last night, and the report was pretty darn good. In my opinion, it was a report that was good enough. I said it after hours yesterday. I was like, I really don't think that this report is good enough to get NVIDIA back above 200. And in the morning meeting today, I called for a short in NVIDIA versus that 198 to $200 level. It was like my main idea that I had written down. But I thought maybe you could get a pullback to 192 on it, not a pullback to 180 support all in one trading session today. So, the NVIDIA report coming out, in my opinion, as good enough, I thought was going to be enough to hit the VIX lower, which initially happened. Hit the VIX lower and create one of those like vol crunching bids that we have seen happen as we get through event risk in the past. And then in my mind, getting through NVIDIA and having it be good enough to be up small, in my opinion, on its report, create the VIX crunch lower. I really felt that therefore was going to be enough to probably create a floor in this market that goes through to the end of the year. And obviously, I couldn't be more wrong. Because on top of that, the market was up really big this morning, so you're actually thinking about levered ETFs being buyers on a rebalance based on how much we were up this morning. You're thinking about how the CTAs, which are selling in any tape this week, are very small sellers. They're inconsequential. You still have the corporate buyback bid that's going on. And yeah, we did see that into a market that was up 1.5%, like where we opened this morning, that you would actually get some vol control selling. But that vol control selling will be quickly abated as the market moves down. So circling back to the game plan for the morning meeting today, I really liked the idea of looking for shorter term shorts because of everything I just described. Yeah, we're probably going to get the vol crunch. It's going to create a little bit of a bid to this market, but you're going to get some vol control selling, some CTA selling. It's a huge technical gap higher, and we can look for early pullbacks in the day. And we called out a short, actually, off the 10 a.m. high, caught the 5-minute correction. Then we called out a short. I actually called the short out off this 10:45 candle, and I took it on some size, and I took it on very, very small risk, looking for a 15-minute correction. Perfectly got the 15-minute correction, liquidated my position. Okay, they're overshooting it a little bit, not a big deal if you turn it over to the 15-minute chart. Maybe we find some support in the space, kind of that midpoint between the 8 and 21 EMA on the 15-minute chart, maybe even if it's the 21 EMA itself. I really would have thought that this market would not be able to get back below like 667.50 to 668 during the day today. I really thought that like yesterday's high plus this 15-minute equilibrium zone would really be the spot where this market bottoms out. At that point, you've pulled back enough that you're losing the vol control selling, but you still have the corporate buyback bid. You still have the concept of the VIX crunch coming in. We're through the NVIDIA earnings report, and I really thought that was going to be it. So, following the game plan from the morning meeting today, I did a pretty good job capturing some shorts this morning, capturing shorts in the Qs, NVIDIA, Apple, SMH, some of my swings as well. And then, honestly, I started flipping long somewhere around like 668, and I think I managed the position decently well. So like it's the Qs, not the spies, but I think I managed the position decently well, and I got smoked in it, which is frustrating because of how broadly bearish I've been to actually get a sell-off like we got today to give back everything that I made on the short side in the Qs intraday, and then flipping it long, and then take a loss even beyond that, and I'm swinging some of it down against me tonight because I'm gonna try to work my way out of this position and massage it kind of in the way that I sometimes do. But I really thought like I've got all these reasons in my head on why I'm bearish that I've discussed with you guys on repeat for quite some time now. But yet, now that we got through this NVIDIA report with the way we did yesterday, for me it was those reasons still exist, but the timing for this sell-off is not going to be now. It's not going to be now. There's too much of a strong forced bid into the end of the year, like we've talked about so much, that those reasons that we discussed are like the weighing machine reasons, but the voting machine, which is what moves us in the short run, should remain kind of strong enough into year end that we're not going to see exactly what we saw happen today. Today's candle is nasty. We're not down as much as we were on October 10th, but I think that today's range is even larger than it was on October 10th when you think about from highs to lows. I mean, holy cow, what a move. Seriously, 675 to 652 all in one day on no catalyst that anybody is really aware of. And honestly, NVIDIA, which did close red today, is still at or above the key 180 support level. So you didn't even get NVIDIA through this insane level that we've been looking at for months off the earnings report. What I had been saying, like when I was doing the podcast with Greta and then with Sammy and JR, was that the only way that you can stop this market right now is if NVIDIA's report is poor enough that you get the stock to gap down below 180 and really smoke it lower. And I actually thought there was a chance that we were going to go into the report with NVIDIA at 180, and we didn't because we bounced so much yesterday. But just 2 days ago, we were at 180, and right now we're at 180. But if you look at the Qs, 2 days ago, they were at 596, and today they're at 584. So this was nothing short of an absolute and utter bloodbath. I'm honestly somewhat baffled by it, even as someone who has been overall really kind of bearish. And we'll see how the market interprets it. Do we get the dip buying that comes right back in like we've seen so much? Do we get the vol sellers coming in at a VIX 2650 to 28 right away like we have in the past that crunch everything back down? We'll see. I still kind of broadly think that the dips in this market are buyable through the end of the year, but I say that without conviction because I also never would have guessed in a million years, honestly, after hours yesterday, after NVIDIA reported yesterday, that we would be where we are today having this conversation. So, really kind of a mind-blowing trading session, completely caught me by surprise. My P&L is honestly very flat today, which is frustrating because I've been so net short, but I got smoked day trading TQQQ to the long side today, and I also have MP long, IBIT long, MSTR long because I'm a crypto bro now. So those are my worst names. Obviously, are all my longs, and I'm still in them. I'm gonna stick with these for now and kind of manage these just off of the extension, which is, if you guys remember when I got into them yesterday, I said, hey, I'm getting into these light. So if they bounce back up, I'm gonna have very short-term targets that are not very far from where they're currently trading, but I'll be able to make a few bucks. But if they move against me, I won't be, so heavy that I can't add. So that's pretty much what ended up happening, actually, was that after hours yesterday and into the gap up this morning, I was selling some MSTR, I was selling IBIT, I was selling MP, a little bit different. I got completely out of the BMNR, and then into the down move today. First it started by me adding back what I had already sold for a profit, and then getting heavier than I originally was. So, I've got an okay position now in IBIT and MSTR, and I kind of like how MSTR trades. It's bouncing a little bit after hours right now as we're talking, but for me the problem was honestly just these cues. Did not expect this in a million years, and that's why you always got to be prepared with an exit strategy. And I do have an exit strategy on this. It's just the way that I trade, as you guys know, is that I tend to not all the time, but I tend to not use just straight hard stop losses. I tend to kind of massage into and out of my positions, and that's what I'm working on with these cues. Is I'm working on massaging out of it. If I could have gotten a little bit better of a bounce, I would have been able to get a lot lighter, a lot quicker. But as you guys can see, we closed on lows. So where does that leave us in terms of the market technicals today? Not good. SPYs are now, as far as I'm concerned, full-on bearish. We are in bear territory here. Pattern of lower highs and lower lows have come in. We are officially in a smaller term downtrend. We are below multiple levels of support. We are below the October 10th low. The Qs here, bearish. Below multiple levels of support, below the October 10th low, now showing us a pattern of lower highs and lower lows. The IWM was already bearish. Even this gap up this morning was not enough, in my opinion, to get the IWM out of our bearish territory. Bearish, lower highs and lower lows, currently trending down. Honestly, this 200 days not even looking too far away right now in the Russell. But we need to measure that bearishness in conjunction with extension. So going back, SPYs as of right now are about $13 extended away from the 80 EMA on the daily chart. Qs right now are about $17 extended from the 80 EMA on the daily chart. So, the Qs would definitely be an extreme extension zone at this point. Definitely anything beyond 15, we're going to consider extreme extension. SPYs are almost there. The flip side of that, though, is that today's technically a day one. And that's a little bit worrisome. It's a day one in front of a Friday. And guess what, guys? It was another Thursday, another weak Thursday. The pattern has been roughly the same, even though we did finally break the streak on Monday and had a red Monday, first red Monday since August. We are continuing the streak of these terribly bad Thursdays. What's Friday going to look like? The last couple Fridays in a row saw early continuation of Thursday's weak price action, but then intraday lows coming in at a certain point and strong bounces. You can see that with this doji candle here that was a Friday on the 7th, and then on the 14th here we had a weak Thursday, gap down on Friday, and got bought back up. So if the playbook is going to play out, and I don't really trust this because we're just talking about like weekly patterns, which is a weird thing that never lasts for very long, but if that playbook is going to play out, we'll be down tomorrow morning, but we will close off of lows. And if you think about that, it would also make sense when you consider just how massively extended we will be if we're down at any point tomorrow. If we have a large gap down tomorrow, or we trade down tomorrow at any point, we'll start to hit some real major downside extension. And then I do think that becomes viable at a certain point. I mean, a lot of charts out there, I think, are actually looking, on the one hand, even worse than the market, but on the other hand, even significantly more extended than the market. And that includes a lot of this crypto stuff, right? I'm really not a crypto guy. I don't got to tell you guys that, but volume is starting to really increase here in this IBIT. You're starting to get a lot of downside extension on this thing as well. It's like, I guess we technically had one rest day here, so it's either a day 2, or you could, if you kind of took out this one rest day where we were barely green, it's like a day 7 or something. So that stuff is continuing to get destroyed, and I do think we're finally seeing one of the factors that I have been talking about a really weak crypto market actually causing selling in the equity market. I do think that that's a factor right now. I think that you're seeing some degree of margin calls in crypto leading to people raising money from the equity market, and the fact that these stocks are destroyed, crypto names, crypto-related names, meme names, quantum computing stocks, like RGTI already given, and I got out of my short in RGTI today. RGTI are already giving bear flag continuation at this point. I think that is also beginning to have a little bit of a consequence on the wealth effect that we've been talking about also. But we'll see. I generally would expect some degree of stability here in this back half of November, just because you do still have a degree of forced buying in this market. And like the corporate buyback bid typically increases as the market goes down too. But the flip side is I shared that chart from Nomura into the VTF at a certain point. Just how crazy that changed from the ETF leverage rebalance plus systematic chart. At a certain point when we were up massively, you were expecting like $23 billion or something like that of forced buy flows. Let's see if I can find it from when I posted it. Yeah, at a certain point this morning, probably like $23 billion of forced buy flows in the market that gave way to, how much did we close down? Spies are down 1.5%. That gave way to probably, it's hard to say because the 1% number is 29 billion of selling, the 2% number is 72 billion of selling, so we're somewhere in the middle of those. So maybe 40+ billion dollars of forced selling kind of into the end of the day as this entire thing flipped. But the incredible part is how we got here, honestly. I'm really, 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 really surprised that we didn't find broader support somewhere between like 668 and the gap fill today at the least. Because then you're losing a lot of that forced selling that was originally having to come into the up move. But is what it is. Trade long enough and you'll see any and every scenario play out. That's all I got. Happy to take a look at whatever you guys have. Billionaire David Shaw has taken a 6.4% ownership stake in Open. Open, not looking good. I've been catching a little bit of a bounce after hours. Yeah, 1 second here. I was supposed to have an offer out. And now I don't see my offer. Thanks for bringing that to my attention, sir. Cool, took care of that. Go gold. Yeah, I mean, gold is holding in great. It's very range bound. Who would have thought that gold would be the new gold and not Bitcoin? I still I don't want to go on a rant, but the thing about gold that I've always learned, whatever, since I was a kid, is it's like that end of the world hedge. And if the nuclear bombs are going off and you need to be able to barter You're not going to be able to pull out your hard wallet and say, hey, can I have some food for this? But you might be able to do it with a bar of gold. I'll just leave it at that. From Robert, at which point would you think stocks market won't care about crypto market? I think we're past that point. Unfortunately, the the whole crypto thing is such a conundrum, and it's such BS, honestly. Like, this whole crypto thing was created to be like the anti-establishment thing, right? And what has made its price go up more than anything in recent years has been the legitimization of crypto by basically big banks. That they start to interpret it, that they start to accept it, work with it, create products around it, create ETFs around it, and yeah, exactly. That's Jim. That's the only use case that has ever been something that makes sense to me, and honestly, that's more difficult to do now, right? Because Coinbase sends you a 1099 at the end of the year if you're moving money around on Coinbase, so you can't even really engage in money laundering and black market transactions in the way you used to, which has been the number one reason for it. But I don't think that you can decouple crypto from the equity market now, because these ETFs exist and because there's so much AUM in them. I don't know what the number is, but just look up the AUM in IBIT alone, and there's 20 of these things, and there's levered ones, and there's Ethereum ones, and there's Solana ones, and there's XRP ones, and there's futures contracts. We have now entwined crypto with, honestly, both the economy and the stock market, and in my opinion, this was the stupidest move, because it's a worthless asset. It's not an asset. Asset's even the wrong word. It truly is a collectible. That's what it is. It's like a Beanie Baby, or like that thing that Josh collects for his kids, whatever that thing is called. That's literally all this is. But it's entwined. Yesterday I was joking around, and today I'm being serious. But I am still long. Labubus. I don't even like saying that word. Evil dolls. This is not even an asset. The only thing it's been good for is scams, money laundering, and that's it. And now it's all entwined with the equity market, where if this stuff continues to implode, it brings the equity market down, it negatively impacts the economy, etc. So whatever. I don't think it. So to directly answer your question, Robert, I don't think that's a thing anymore. It's all entwined. You're frustrated that the move happened on an intraday basis? Yeah, there were definitely times when I was hoping that we would get this type of move entirely via gap. But honestly, IBIT total assets are $69.74 billion. And again, that's just one of them. Anyway. Yeah, I mean, my degree of frustration on this is I feel like there were so many opportunities where things were lining up where we could have had a day like today, and then today was the other day. Today was the day where that actually occurred. If BTC is a worthless asset, is gold also worthless? No, because gold is used in. So first of all, it's used to some degree in electronics and things like that. So it actually is an input. It's also used in jewelry, and also, I think that there's a use case still for gold, like I was describing before, where I've told this story in the past. I'll tell the quick version of it. When I was a kid, my grandfather had me watch the movie A Tale of Two Cities, which is obviously based on the book, but we watched the black and white movie, and it's about the French Revolution. And at the end of watching the movie, he sat down with me and he said, The only people that were able to make it out of Paris alive were the people who had access to gold. That was the way. You had gold buried somewhere. You were able to get it. You were able to get out of Paris during the Revolution, and I do still think that is a use case, that it's like the OG currency. It's not the best currency in the world because it's heavy to carry around and everything like that. But it's like I was saying before. If I need to get out of Paris when shit really hits the fan at some point in the future, which hopefully never happens, and I try to give you my cold storage wallet for my Bitcoin, when there's no electricity, good luck. But if I've got that gold doubloon somewhere and I'm able to produce that, maybe I can use that to buy myself passage on the ship out. So there is some degree of value there, more than just as a collectible. And I would turn you back over to, I had brought it up the other day, Aswath Damadorian. If I'm saying, I feel like I always butcher his last name, but he is like the in my opinion, like the fundamentals guru. He had a really interesting post on gold that also briefly mentions Bitcoin in it. I'll see if I can find it for you. Oh, here it is. I already have it up. Boom. I would say this is worth a read for you, and that's as someone. And this guy Aswath has never been a gold bug, never owned gold. It's never been his thing. But it's just really interesting, the deep dive that he does on trying to understand a value for it. And when you read through that, then you'll see, again, that there's a use case there that there just is not for crypto. And look, again, I am by no means, I'm not a gold owner either. Actually, it's not 100% true. I've got a very little bit of gold and silver for almost the exact reasons that I'm describing. Yeah, exactly. P.S. And that's because gold is not. Let me use Aswath's words here. Gold is not an asset because it cannot be valued based upon expected cash flows, which a asset like a stock, which is a share in a company, can be. So I'm by no means a gold bug, but specifically because you asked, that's my thought process on it. I prefer, if you got to give me one or the other, if I had to own one or the other, it's definitely going to be gold. Though in this moment, as a trade, I'm not long GLD. I am long IBIT. So take that as you will. Let's see here. What did I miss? Popping up from Eli. What do you do when you have a bias, but you just can't find a reasonable way to execute? I think for the way I trade, I have a good grasp on sentiment, but on a day like this, I just couldn't find a way to get in without it going against my process. You never go against your process. So I'm a big believer in having like a thesis. You're referring to it as a bias. I like to refer to it as a thesis. That thesis is usually based in something that's a little bit more fundamental. And then I need the technicals to confirm that the thesis is correct in order for me to execute. If the technicals don't confirm that the thesis is correct, you should not execute. Let the technicals confirm it. And the price action and the technicals, they also tell you the how and the why on how to execute, how to manage risk, and how to maximize reward. So if the process is not confirming the thesis, then you don't do anything. And sometimes that can be annoying because sometimes that means that your ideas work without you, but I think in the long run that's better. From Richard, I want to put on some GLD positions. Would you say 368.50 range low is an okay stop loss? If no, how about 360? I would prefer the 360 stop, which is the absolute low of the multi-month range that it's building out, or like 1 month range that's building out. Similar but different to how Last time it kind of went parabolic. It needed a 5-month range wedge to build out before it broke up and went parabolic again. I think that you're going to need some sort of a similar type of pattern. I would caution that if we really go into a bear market, this probably comes down as well. But if you wanted to buy it, I'm not suggesting that you do, I would use 360 as a stop personally. Look at Hyperledger Fabric. It's an IBM because that has nothing to do with money, but utilizing the distributed ledger tech. TT, I have no idea what you just said. I've always been a believer, I would just say, in blockchain, just not cryptocurrency. I think that blockchain itself is a great technology, and cryptocurrency is a solution seeking a problem that doesn't really exist. SPX is now down 5.1% from highs. Okay. I had originally thought like a 3 to 7% correction in this market makes sense. So we're in that zone. Doomsday meeting. Huh. That's interesting on the US in 1933. Michael's saying gold is a universal use case until the government criminalizes it. From Liam, what do you make of GDX versus GLD? So GDX is composed of stocks. So you got to remember that this does not just move purely based on gold. It moves based on the combination of what the stock market does, because it's an ETF of stocks, and what gold does, because it's an ETF of stocks that mine gold. So you tend to see some degree of correlation with GDX with both the stock market and with how gold itself is moving. And I actually tend to find that GDX is a better trading vehicle, broadly speaking, than gold itself. It'll move a little bit with gold, but it's not as gappy, and again, you're trading the actual companies there. For Matthew, what pivot high to target for Sandus for a short reentry if not current? Good luck. If you didn't have it from today, if you didn't catch Sandus short today on the inside and down, I don't know. I think you need at least 218 to 218 to put a short on. It's $16 above where it's trading. So I kind of feel like if you don't have it, you don't got it, and you're not going to get it, unfortunately. Maybe get a strong bounce back to 218 to 228 that could be shortable for a pivot high. But you really, if that happens, you want that to be a reload, meaning reshorting stock that you already covered because you caught this move, more so than putting on a new trade at that point, in my opinion. Over in the YouTube, over in the YouTube from Austin, you can also look at Vol, so you can also look at the VVIX. Yeah, VVIX accelerated 129-ish. It's getting hard to keep the VIX down when there's so many dislocations with dealer flows. Yeah, I mean, so there's been just massive amounts of hedging that have been ongoing as protection from portfolio managers who want to keep a strong year performance-wise strong for themselves, and that's been helping to elevate the VIX. But the thought process would be that when you get through the event risk of NVIDIA today, that you would have seen some degree of an unwinding of those hedges and the VIX getting crushed back down, which then creates the stock market bid. That was kind of my initial thought process. Again, in the morning meeting this morning, I was talking about how very short time frame on an intraday basis, I'm bearish, but that NVIDIA really, in my mind, I thought we had a floor for the market now, and that we could potentially start to work our way on a grind higher, into the end of the year, Santa Claus style rally, and obviously that was not the case. And the burden is on the bulls now to recapture this market because bears are in control. We got bearish technicals across the board. From Apex Joy, is the current daily corporate buyback bid less than 40 billion, which is CTA sell amount? The current buyback bid is like $7 to $8 billion a day. The CTA sell amount into a down tape was 17 billion over the course of the week, I think. So that is what's that, like 3 billion, 4 billion a day. So really the corporate buyback bid should be bigger than the CTA sell flow if you're just comparing those two flows. But there's more to it than that. You know, like I just said before, the leveraged ETF rebalancing is adding like $7 billion of buying or selling into every 1% move. So in a 1% down move, you get $7 billion of additional selling. I'd say it was more than that, you know. So CTA sold today, Vol Control sold today, the leveraged ETF rebalance was selling today. So, you know, all of that is definitely going to outweigh the corporate buyback bid. Though the corporate buyback bid does still have some degree of an insulating effect on this market. It's just not enough. It's not enough right now. It's being overwhelmed by other things. Thanks for the question, Apex Joy. Thanks, Michael. From Liam, do you think that will be a high for a long time on these memory names? Yeah, I mean, that's a hard question to answer, you know, because I always like to take things one step at a time. But another way to interpret today's candle is how you hear me describe candles that look like this as like a penalty box candle. It puts the market into the penalty box, and the only way that you get out is by negating today's candle. And you can apply that for the market, and you can apply that for the memory names, and you can apply that for any stock that looks like today's candle, and you're going to find a lot of them out there. So the market right now is guilty until it proves itself innocent. It's in the penalty box. It's got to be able to negate today's candle in order to regain bullishness. And that's going to be a tall order to be able to do. I still don't think it's impossible, to be honest. I don't think it's impossible that by the end of the year we get back above today's high, but it's going to require some work. So we'll monitor that as it comes. All right, folks. Looks like we got through it all. I'll wrap it up there. Have a great night. See you tomorrow.